Richard, where are we in our campaign to bring securitisation back to life in Europe?
We've made very good progress. I think we've seen very important statements by very senior policymakers in Europe, from President Juncker down, and including Commissioner Jonathan Hill, about the important role that high-quality securitisation has to play in funding Europe's real economy and helping to broaden and deepen our capital market. So I think good progress.
So, if you like, some of the intellectual victory has been made. People are beginning to understand the contribution of securitisation. But is that translating into issuance and volumes traded and so forth?
Well, issuance levels over the course of the last year have continued to follow the same path that they have done since 2010. So placed issuance and securitisation has been bumping along at just under 100 billion euros a year. Last year, the full year figure was 76 billion euros, so disappointing but consistent with previous years. This coming year, though, is particularly hard to predict because of the intervention of the European Central Bank and their ABS purchase programme. That has led to a lot of compression in spreads, which is a good thing, and it's also sent a very positive signal to investors in the market that securitisation is a product that can be invested in safely, but it's very difficult to predict what impact that will have on actual volumes for this coming year.
So the omens are good for a revival of the market, but we're not quite there yet.
I think that's right. I think the omens are good, but I think there's still a lot of work to be done on the regulatory front. The key thing that we have to achieve is to bring back the function of risk transfer in securitisation. Since the crisis, securitisation has been primarily a form of funding. But if we're really to broaden and deepen the capital markets and strengthen our banking system, securitisation needs to resume its other important role as a tool for risk transfer. And to do that, we've really got to get more investors back into the market and fix the capital requirements.
And so very specifically, what needs to change to enable that to happen?
Specifically, I think we do need Solvency II to be looked at again. Solvency II has just been finalised in the last week, in fact, published in the official journal. And we've been saying for some time now that the final text is still too harsh in its treatment of securitisation and doesn't recognise the strong performance that securitisation in Europe has delivered since the financial crisis. And also the Basel rules have also been finalised in December. There's a little bit more room there, I think, to work more with the concept of high-quality securitisation in that context, which work is continuing. So the door may not be completely closed on that yet, but both of those regimes really, we think, need to be substantially revisited if more bank investors are to come back into the market, and even more importantly, more non-bank investors like insurance companies to come back into the market, particularly to take the mezzanine risk in securitisations.
So there's still a gap between the very warm policy pronouncements at the very high level and, if you like, the way in which the detailed rules are being worked out. I mean, how confident are we that we can close that gap?
I think there's a lot of acknowledgement now at the senior policymaker level, as I was saying earlier, that these issues do need to be fixed. More and more we're hearing in Brussels that these things need to be looked at again. The EBA is looking at a concept of simple, standard and transparent securitisation. There's been some talk about a new regime for securitisation in Europe. So I'm optimistic that the winds, if you like, are slowly turning from a strong headwind against the product to perhaps a gentle tailwind behind us. But we really need to pick up the pace on that.
So presumably the Capital Markets Union initiative is helpful in this respect.
Absolutely, and I think securitisation is a product that really should be at the heart of that, because securitisation is a bridge from the banking system to the capital market. So there's a very, very strong resonance between securitisation and Capital Markets Union, and that is something else that we're hearing loud and clear from Brussels.
And if you had one last message for policymakers in Europe around securitisation, what would that be?
I would say please look at the evidence. We've now got 7 years of hard evidence of how strongly, both from a credit and a price perspective, securitisation in Europe has performed since the financial crisis. So, please let's move on. Let's recognise that strong performance, and let's find a solution that works for Europe.
Thank you very much.